To ensure accountability and transparency, state statute requires local governments to undergo a yearly, rigorous financial audit conducted by an independent CPA firm. To review the 2024 fiscal year, Jackson County brought in Moss Adams to audit its financial performance and present their findings to the Board of Commissioners. For the last several years, Jackson County's audit results have shown nothing but healthy financials and responsible use of the budget, and 2024's results were no different. Here are the highlights from the presentation.
Well, thanks for having us here today. I'm Amanda McCleary Moore. I'm a partner with Moss Adams, and I'm responsible for conducting the audit of the county, as well as signing your audit reports, making sure that we follow all professional standards, and make sure that we get your audit done on time.
And I'm Leslie Daggett, and I'm on the audit team.
And Leslie's going to kick us off with your audit results.
Okay, so the first one, the agenda. So the things we're going to cover today, I'm going to cover the nature of services provided and the significant audit areas, and then Amanda's going to cover the audit opinions and reports, communication to those charged with governance, the county statistics, and then the new standards. All right, so nature of services provided. So number one, we audited the county, the Jackson County 4-H Master Gardener and Agricultural Extension Service District, the White City Enhanced Law Enforcement District, in accordance with the generally accepted auditing standards and generally accepted governmental auditing standards. This year there is one change. In the prior year, we prepared a review over the White City Lighting District. And as of January 1st, 2024, House Bill 2110 amended the municipal law. And now audits are required for governments expending more than $1 million, which the district doesn't. And so you guys had the option of an audit or what we call an agreed upon procedure. So we did the agreed upon procedure, and which it directs the auditors to perform and report results of procedures specified in the Oregon minimum standards. And the procedures address certain components of financial reporting, operations, and compliance. So it's not an opinion over the financial statements, but instead it's just addressing these agreed upon procedures. So, number two, we assist with and perform a technical review of the financial statements to ensure they were in compliance with both generally accepted accounting standards as well as the Government Finance Officers Association, or the GFOA. You guys do have an ACFR, which means your financial statements include additional statistical and introductory sections. And then the county has received the GFOA Certificate of Excellence for the last several years, which is a great accomplishment. Number three, since the county is an Oregon municipality, you are subject to the Oregon minimum standards. We test compliance with the provisions of the Oregon revised statutes, which include such items as review over budgetary law and procurement policies. Then number four, the single audit. Since the county spent over $750,000 in federal awards, we performed a single audit under the uniform guidance. Number five is, I know it's okay. I was like, it's all right, is passenger facility charges. Since the county does have an airport, we issue a report over the compliance requirements related to passenger facility charges. Our testing is done in compliance with the requirements described in the Passenger Facility Charge Audit Guide for public agencies issued by the Federal Aviation Administration. And then finally, number six, reporting. We report on the overall audit plan at the beginning of the audit, and then at the end we report on the audit results, including communicating any internal control findings or issues of non-compliance, and that's what we're doing today. All right, there we go. Critical audit areas. So these aren't all of the areas that we test, but these are the areas we spend the most time on. So kind of gonna go over kind of the way that we test them. So cash and investments, it is a significant balance on your financial statements, and there's extensive disclosures. We test it through audit confirmations. We ensure the banks used by the county are qualified depositories, and then we review the financial statement disclosures to ensure that they are complete and accurate. So revenue and receivables. This is a complex area. There's three different bases of accounting. There's the budgetary basis, the full accrual, and the modified accrual. We test this through confirmations. We do some analytical procedures, and then through our test of details. And then we also test revenue cutoff through our receivable testing to make sure that the revenue is recorded in the proper period. Capital assets, it's also a significant balance in the full accrual statements and proprietary funds. We attest the additions and disposals, and then we look at depreciation for reasonableness. This can be a challenging area just because all the departments must work together to make sure that all the assets are captured and then properly removed. So next is leases and SPEDAs. So 2 years ago, there was a new standard, GASB 87, related to leases, which required the county to add a few more lines on their balance sheet to record the asset and the liability related to their leases. Then last year, there was another new standard, GASB 96, related to subscription-based information technology agreements, or SPEDAs, that essentially did the same thing, but over those agreements. So in the current year, we test new leases and SPEDAs to make sure that they were properly recorded. So then debt. It's not a significantly complex area. However, it is like another area with a lot of financial statement disclosures. We send confirmations, we test payments and proceeds, and we test compliance with any debt covenants. Accrued liabilities, PERS and OPEB. So we receive the information from the state for both PERS and OPEB. Since actuaries are used in these areas, we test inputs for reasonableness and we review their assumptions. And then for the bottom three areas, we are able to leverage our testing with the work performed by internal audit. So grants, as I mentioned, we have a single audit because the county had over $750,000 in federal expenditures. We review the compliance supplement to determine the areas to focus our testing on for each major program. Each year we test several major programs, and this year we tested 2 coronavirus state and local fiscal recovery funds and the airport improvement program. Since the county is an Oregon municipal corporation, we are required to perform tests of the county's compliance with provisions of the Oregon revised statutes. Some of the areas we test for compliance are use of approved banks, debt, insurance and fidelity bond coverage, and investments of public funds, and then preparation, adoption, and execution of the annual budget. And then finally, internal controls and the IT environment evaluation. So this is all part of our planning procedures. It helps us to assess risk and develop our audit plan. And we obtain an understanding of controls, perform walkthroughs of entire transactions, and also test controls. This year, we tested controls specific to materials and services expenditures, property taxes, capital assets, and IT in addition to our walkthroughs. So we did do a little bit extra this year related to IT since we hadn't for a few years, which is a little bit different, but everything else is pretty consistent with prior years.
So after all of that work that we perform that Leslie just went through and following the professional standards that we do, we issue 5 audit reports that get bound and included in your ACFR. So I'll go through the results of those reports. They're quite lengthy, so we'll summarize them in a few sentences here. So the first report is over your financial statements and whether that it is materially correct in accordance with the generally accepted accounting principles. So based on all of our test work, we were able to conclude and provide a unmodified or clean opinion. So overall, great results there. I know this is something that you expect in order to maintain your GFOA certificate as well as have a clean ACFR, but still a great accomplishment. That document's over 200 pages, and so it's just a really great accomplishment to continue to receive that clean or unmodified opinion. The second report there is that Oregon Minimum Audit Standards report. So in Oregon, we do have to issue a separate report over compliance as well as internal controls over financial reporting. We did have one reportable finding in the current year related to the budget process. And as part of the budget process, when you're adopting that, you have to do a publication in the newspaper as well as include the budget information as well as when the budget committee is going to meet online 10 days before that meeting. And so the only piece that was missing there is it wasn't on the website for the full 10 days before that meeting. So we did have one comment in there related to that. This report also communicates any internal control deficiencies that rise to the level of significant deficiency or material weakness in internal controls over financial reporting. And we did not have any internal control deficiencies that rose to that level. So just that one comment in the Oregon Minimum Standards report. The rest of the reports you'll see on the screen there, all clean reports. So the second one there is is in compliance with the governmental auditing standards. And this would be if we identified any instances of non-compliance with laws and regulations that would have a significant impact to your financial statements, or if we had any of those internal control deficiencies that rose to the level of significant deficiency or material weakness. So you can see there, no reportable findings, a clean report there. That fourth report on the screen is your uniform guidance report. This is our results of the audit of the two major programs that Leslie mentioned, which were over your ARPA as well as your AIP awards. And we issued clean or unmodified opinions over each one of those awards. And in addition to that, we do look at internal controls, but we look at different internal controls. We look at internal controls over compliance. And if similar to financial reporting, if we had any internal control deficiencies that rose to the level of significant deficiency or material weakness, it'd be included in this report. And as you can see, we issued unmodified or clean opinions as well as no internal control deficiencies that rose to those levels. The last one is your passenger facility charges audit, and this is a compliance report, and we found that the county was in compliance with those requirements. So overall, some really good reports and findings as part of our audit this year. Just the one item related to the Oregon minimum audit standards and complying with the budget law to make sure that that is posted on the county's website 10 days ahead of those meetings. But overall, some really good results of our audit process this year. Any questions before we move on to our additional communications? Yeah.
Just out of curiosity, you'd mentioned that it wasn't posted to the website 10 days. What was the time frame before? Do you remember?
Nicole, do you remember?
I don't. It was 7 or 8, but I can't remember 100%.
Okay, so
it was close. It wasn't
close.
like it was very short, but it wasn't quite that 10 days.
Okay, appreciate that.
I knew you were going to ask me that, and I meant to look before I came, and I just forgot to do that. So
I know that the other publications were made properly, and also we have put a system in place, have a checklist to make sure that it doesn't occur again, that we didn't get it on our own website with enough time. But we've been doing this a long time, and I think that's the first time that that's happened.
Yeah.
And I'm not, we tried to go back and track why, and we couldn't verify why or why not. So we just put a system in place to correct it.
And I was certain that it had occurred.
Mm-hmm. Yeah. All right. So in addition to those audit reports that we issue that get included within your financial statements, we do provide additional information related to the audit that is not otherwise included within the financial statements that our audit standards tell us are important to communicate to those charged with governance. So in this case, the Board of County Commissioners. And so you have a separate letter for this. So I'm just going to highlight a few of the points in there. The first one is related to plan, scope, and timing. We present a plan at the beginning of our audit. If there's anything that's going to result in a scope change where we need to do additional work, or the county has asked us to do some additional information or look at something differently, we would communicate that with you so you had an understanding of those additional procedures. Or if we had to modify our timing for some sort of reason, we would let you know. So if you had to file an extension or something along those lines, we would just communicate those reasons in this letter. And we did not have any changes to plan, scope, or timing. In fact, the county issued their financial statements about 2 weeks earlier than in the past. So nice to see some movement there and get that out just a little bit earlier, a little bit ahead of the holidays, and have that done and completed. So overall, really good work from your team in order to be able to get that completed sooner than his story. So just wanted to kind of communicate that we're proud of the team for doing that this year. In addition, there's significant accounting policies that management has to put in place in order to put together this very large document. Those are all included in note 1 of the financial statements. You'll see significant accounting policies there, and it just highlights some of those key areas where management has had to develop policies. Specifically, you're probably going to see areas like over capital assets and what your useful life is when you depreciate those assets, but those are all communicated in note 1. If there were any significant changes to accounting policies, we'd highlight that for you. The only thing that changed in the current year really related to the accounting standards was GASB 100 on accounting changes and error corrections. This did not impact the county's financial statements, and while that standard kind of implies that it's only related to errors or change in estimates or corrections, it also is related to if you had some sort of change in major fund. There is a new presentation of how that looks in the financial statements, but in the current year, the county didn't have any changes in major funds, what's presented in your financial statements, so it really didn't have an impact to the county's financial statements this year. Management's judgments and accounting estimates. So there are a number of accounting estimates that are used when putting together the financial statements. Some of those estimates revolve around claims or those PERS and OPEB liabilities that Leslie mentioned. All of those you engage an actuary to help you with those estimates. However, it's not so easy as just getting those estimates from your actuary and putting them in the financial statements. It still involves management to classify those within functions and within the funds of the financial statements. So some additional work there, but just to highlight that there are estimates included within the financial statements. Audit adjustments made or passed. As a part of our audit process, we identified an error and it was material. Management would, of course, have to record that entry in order to receive your clean or unmodified opinion. And we would communicate that to you, that we issued a clean or unmodified opinion, but management did have to make this correction, and we didn't have any audit adjustments that management had to make in order to obtain that clean or unmodified opinion. The second category of adjustments is past adjustments. These are adjustments that are not material. So if we identify something, or if management identifies something subsequent to year end that is an adjustment that should be made to the financial statements but is not material, management can decide not to make that adjustment. We did have one past adjustment in the current year related to revenue recognition, which Leslie went through. That is a very complex area because you have the multiple bases of accounting, and getting cut off correctly under those different bases can be challenging. So, and this is related to the airport fund. So there was one related to cutoff of revenue, and it was actually related to beginning of the year. So that will, sometimes you'll see a past adjustment hit twice. This one will fall off for next year as it was related to a beginning of the year amount, but just getting the timing of cutoff for revenue correct. So we did have that one adjustment this year. If management were to consult with other accountants or auditors based on some sort of either accounting policy or something that we've discussed on how a treatment of an accounting or transaction, and they consulted with other accountants, we would communicate that with you. And it's really just meant to highlight that if they were to come to some other conclusion, that we were in contact with them to make sure that we all had the same facts and circumstances as it relates to a particular transaction. And we're not aware of management consulting with other accountants. The next one is if we had disagreements with management. This is just to highlight that we would communicate that with you, and we had no disagreements or difficulties in performing the audit. Like I mentioned, it went very smoothly, got it done early this year, so overall, really good results there. If we had, as I had mentioned before, if we had significant deficiencies or material weaknesses in internal controls over financial reporting or over compliance, we would communicate those to you and what they were, but we did not have anything to communicate or bring to your attention there. This is just to highlight, Leslie mentioned this in the beginning, you do get the GFOA certificate for your financial statements. You also get the GFOA certificate for your budget document as well as the popular annual financial report. And so you get what's called the Triple Crown. You get an award for all three of those documents. This is to highlight that in addition to that very large document that's 200 pages, you have another document that's called the Popular Annual Financial Report that's on the county's website. It's a very condensed version. I think it's like 8 to 10 pages and highlights really all of the highlights of your ACFR in a more digestible format and easier to read for those that are not as familiar with reviewing a full ACFR and all of the content in there. And the county does get an award for this as well. So that is out on the county's website. Just wanted to highlight that there because you're one of few governments in Oregon that get that Triple Crown. So those were our audit results. Now we're actually going to really focus on what happened at the county over the last year, as well as looking at some trends over the last 4 or 5 years. So this first slide is really just looking at overall county-wide revenues. And you can see that it's in different buckets there. You have your grants and contributions, your charges for services, and property tax revenue. Those are probably the largest areas of revenue, and then some other miscellaneous revenue. And you can see that there's been a trend, an upward trend in your revenue over the past 4 years. And that comes somewhat from the COVID-19 funding, so your ARPA, the CARES Act funding. So some of that has been related to that. In the current year, if you really dive into the details of the current year increase in revenue year over year, it really relates to investment earnings. So investments have been recovering from the downturn that happened a couple years ago. So that little negative amount there that you'll see in other revenue really is related to investment earnings, because otherwise how do you have negative revenue, right? So that's what that is related to there. So as investments have recovered over the past couple years, you're seeing that growth there in your investment income. And that was really the main increase from 2023 to your 2024 fiscal year end. So these are the countywide expenses. These are broken up into probably the major functions within the county. So we have your general government, safety, health and human services, transportation, and then the rest of them are grouped together, as well as all of your business type activities grouped together there as well. And what this shows is really a trend of expenses being a little bit flat. There is some increases there in the current year for fiscal year 2024. Some of those increases really were related to increased costs due to inflation and personnel costs. So a lot of the increase in cost for this current fiscal year is related to that, which is not uncommon. It's not. We're seeing that within many of our government entities. There were a couple other projects in transportation that had some increased costs there, but I would say really looking at the year-over-year analysis that it was really attributed to just increased costs over similar services. So this is your net position. So this is on the full accrual basis. So this is when you're looking at your financial statements, this is going to be pages 1 and 2 of your financial statements and has the full accrual accounting basis. And really looking at your net position, so that section really at the bottom. This is if you were to take all of your assets and reduced it by all of your liabilities, what's left and what's it made up of. And so this is a picture of the trend over the past 5 years. That first bar is really your total net position. So you are seeing an increasing net position, which shows some healthy growth there. And then the next 3 bars really show you where that growth is coming from. The second bar there is your net investment in capital assets. So if you were to take all of your capital assets and reduce it by the liabilities that are related to those assets, you'll get that green bar there. We do like to see that trend upwards a little. That means that you're continuing to invest in infrastructure and buildings because as time goes on and there's wear and tear, you will at some point have to make those cuts. And so we do like to see that. The current year was somewhat related, if not mostly related, to actually projects at the airport. So there were some significant projects there, and so that goes into your net investment. And so those are essentially pieces that you cannot spend. They're not spendable. They are invested in assets, so it's not cash that the county has available to spend on resources. The next bar is your restricted resources. So you can see that actually has maintained relatively flat over the past 5 years. These are all resources that you have to use for a specific purpose, either by law or statute tells you that you have to use them for a specific purpose. The county doesn't have any flexibility in what that funding is used on. And then that last bar there is your unrestricted net position. This is where the county does have some flexibility in where they're spending their funds. And so you've seen a nice uptick in that. I know the county has some planned projects, and so it's nice to see that you're building in some reserves there in order to have these projects in the future, whether it's if you need to invest in capital or supplement other areas. It's a good trend to see that on a uptick. And I would say that these are very good results to present. I would say if you were to compare this to many of the other counties in Oregon, you might not see this same trend. So overall, the county is showing a lot of healthy decisions in maintaining their balances. This is just looking at your general fund. So this is the fund that you have the most discretion to utilize county resources. And this is similar looking to the net position. This is looking at your fund balance and actually the revenues and expenses for the year over year. And so you'll see that there is a little bit of fluctuation there. This is where actually a lot of the COVID-19 money is funding into your general fund. And so that is impacting your revenues as well as fund balance there. But this is also showing some nice growth. So this is the other side of your general fund. So these are the assets portion. This is just cash, and you're seeing that has been increasing over time. What I wanted to highlight here on this slide is while the county has been able to grow the cash balance and reserves there is about $43 million unearned revenue sitting in there related to some of that COVID-19 funding. So if it had not been reported as unearned, you would actually see that in it'd be similar to a restricted net position or restricted fund balance where you have to use it for specific sources. So there is some unearned revenue that's sitting in your cash, so which is about $43 million in 2024. But overall, really healthy cash balance in your general fund. And this is a statistic that's looked at quite a bit as it relates to your general fund balance, or as a percentage of your expenditures over the year. And I would say that there's a GFOA best practice out there that says to always maintain at least 17% in order to be able to fund your operating cost through when you start receiving property tax funding. And so you can see that you're well exceeded this and have some reserves there to hold you through if you needed to. And I know that I know you have, this is intentional and for some future projects, but overall healthy there and well exceeding the minimum. So this is just a snapshot of the countywide debt. So when we get to the next slide, we talk a little bit about property taxes. You can see over the past 5 years that county debt has decreased. I think in these 5 years, I don't think that there's been any new additional debt. I think that maybe in 2020 was when the emergency systems debt came on the books. But you can see that you've been making your payments and not incurring a lot of debt in order to maintain the services that the county provides.
Can I just add one comment?
Yeah,
real quick?
absolutely.
This is mostly for the public. I assume the board already is aware of this, but the GO bonds that are identified here, while it's county debt, they were taken to serve agencies countywide for the purposes of upgrading ECSO or emergency communications, Southern Oregon 911 dispatch towers and infrastructure and equipment. The county was the only agency that could carry countywide debt for all of those agencies at once. I think there's 32 or 33 participants, and that includes all cities, fire, safety, that serve our county citizens. So I say that because typically GO bond debt is because the county took debt to build a library or a juvenile facility or something. This debt we didn't take necessarily for ourselves. We took it for our entire community, and our community passed a bond by a healthy margin to be able to do that. So I just wanted to point that out.
And the entire $24.7 million in the general obligation bond or special assessment is represented by that ECSO.
Yeah, that's the only. Yeah, correct.
And then the 12.9 in revenue bonds are mostly airport.
Mm-hmm.
Yes, yeah. They're airport revenue bonds, which means those aren't included in people's property tax. They're covered by revenues the airport earns.
Mm-hmm.
Yeah.
Great. So this is what I was going to mention, just to highlight what you've been able to do in the county. You build your cash reserves, not take out a lot of debt in order to be able to perform services. You also are working with a direct tax rate that's quite a bit less than your counties in the north. So we used 3 counties in the north just to kind of say what their direct tax rates were compared to what the county has used. This clearly hasn't changed much over the years, but you're still able to really strengthen your financial position with a lot less revenue per $1,000 of value in properties. So overall, just wanted to highlight that. I already talked about this, so we'll breeze by this slide, but you did implement one new GASB accounting standard this year, GASB 100, related to accounting changes and error corrections. Did not impact the county statements. This could impact in the future because, as I mentioned, it's not just related to accounting changes or error corrections. The accounting changes really includes if you have a change in major fund, which is a mathematical calculation. So you could happen to see a change in the future, but nothing in the current year. Then there are 4 new accounting standards just to be aware of that are going to be implemented over the next couple years. You'll have 2 for fiscal year in 2025. That's GASB 101 on compensated absences. So you'll need to evaluate whether your current policy for calculating compensated absences complies with the new standard. There are some additional clarifying items on what is considered to be a compensated absence. So it'll take some work to make sure that you're getting that updated correctly in the financial statements. GASB 102 is on certain risk disclosures, so this really could just have an impact to what you need to disclose within your note disclosures. This wouldn't have an impact to the presentation of your financial statements, but it still will need to be reviewed and make sure that you are complying with all of those risk disclosures that are required to be included in the financial statements. After that, for fiscal year 2026, you'll have GASB 103 and GASB 104. For GASB 103, this will impact the county's financial statements. Right now, you're presenting your budget to actuals as statements at the beginning of your financial statement. Under this standard, it's meant to really provide some consistency on how financial statements are presented. Until then, GAAP or GASB standards allowed users to include them as a statement or include them as required supplementary information after your note disclosures. This clarifies that they will be required to be reported as required supplementary information for consistency among governmental financial statements. So you will have a change there. But it's really just on placement of those statements. And then GASB 104, haven't dug into this one a ton yet. It came out not too long ago related to disclosures of certain capital assets. And I think that there's been a lot of inconsistency on how governments have reported their leases and subscription-based IT arrangements as capital assets. It's really meant to clarify some of those standards on how they're presented in the financial statements. So something to look for in 2026. But with that, we just want to say thank you to the whole team and to the county for a great year. And if you have any questions, we're definitely available.
I have one thing.
Yeah.
I should have already asked you this.
Yeah.
I'm sorry. I'm assuming that the $43 million in unearned revenue that's reflected in our fund balances, that airport is at COVID airport.
I believe
Direct federal.
Yeah,
Yeah.
I believe so.
Okay.
I didn't dig into the details before I came of the entire 43, but I think that
Majority of
yeah.
it. Yeah. Okay.
It's ARPA. Yeah.
It's like 36 million is ARPA.
36 is ARPA and the rest is air. Okay. I know. I should have already
No, you're fine. Yeah.
I have a question. Who creates, every year we have new standards to meet or look forward to adjusting to. Who creates those? Is it legislatively?
It's the GASB.
It's just
Yeah, so the
department.
GASB is the Governmental Accounting Standards Board, and then when they issue a standard, it's called the GASB 100. But yeah, they're responsible for implementing the new standards. We do all get opportunities. They'll do an exposure draft that goes out. Moss Adams, as part of our review process, we actually do review those standards when they're in the proposed form and provide feedback and content back to the GASB before those are issued. We have a number of people that work on technical committees with the GASB to be able to provide input on those. But ultimately, at the end of the day, the GASB is responsible for issuing those standards.
Okay, thank you. Any other questions of the board?
Just a comment, which I'm sure sounds like a broken record by now. This is my 11th one of these reports. And every year I remark on how incredible it is that we do receive these clean unmodified positions, opinions, and receive the GFOA Triple Crown, which you mentioned is not common, but it's probably a lot less common than people realize. Very seldom is it achieved by other counties, but much less to the streak. I don't know what we're at, 14, 15 years, something like that.
Well, for the GFOA Budget Excellence Award, it's 30.
But as far as the Triple
30
Crown,
something, the Triple Crown, I think
47?
Yeah.
Well, let's keep working on that.
Crown is within 5 years that they started.
Yeah.
But it's new,
So the
Okay.
GFOA is one of the 3 awards we're
Right.
talking about. That one's 47.
Well, we looked a while ago on the number of counties who actually ever achieve it, and it's very few, but much less year after year. So again, it sounds like a broken record, but it bears repeating, and it bears, again, reiterating the work that goes into this. And it's done, our audit department, our finance department, each and every one of our department heads, and it's a daily effort, I'm sure, to employ the type of tracking, reporting, and not to mention following all of the voluminous rules and standards and the standards that change every year. This is no easy task. And I don't ever want to let that go without saying how impressive it is and how much we appreciate that. And the other thing that I think we always need to make sure, and again, we did have the one reportable finding, and it, I'm not going to say it's minor, because there probably are no minor. But it's one that was addressed quickly, and I'm confident we do have the new procedures and safeguards in place. I knew that happened immediately. I didn't even have to ask that. The other thing that we need to always look at and appreciate and make sure people understand is our net position is increasing, and that's despite increasing costs. Some declining revenues in some areas. Our tax revenue is going up in the increment that we expect. But we're also still able to offer the same robust service levels. And that doesn't mean we're able to do everything we want. We have to make tough budget decisions, but it continues us on this great path, and to have the resources available to do the things that we need to do, the capital infrastructure investment that some of these reserve funds are earmarked for. But anyway, all those things I think definitely bear repeating, and letting the public know where we are and that we're in excellent financial position, and it's because of the work of everyone here. I appreciate it.
Thank you. Any comment?
I can't say it much better than that. That was well said, Mr. Dyer.
Well, Amanda and Leslie, thank you for coming for the great presentation and for working so closely with our departments and administration, obviously leaving no stone unturned. And I just see our departments, our county and our administration continue to budget conservatively within the monies that have been trusted to us by taxpayers. And we continue to budget with expected changes, whether those are the ever-changing accounting standards or the financial changes, which are no doubt probably coming our way. And also our budget committee is a big part of this, that will be vetting this out when we have the upcoming budget hearings. So, and they're big. I appreciate their work in all this as well. But thanks to all involved, and thank you again for the great presentation.
Great. All right. Thank you.